guys, good afternoon and welcome to Your Stocks. I'm Pavitra, with me is Ekta, and we have a lot of queries to get through, but the markets, ever since the word go have been quite weak, although we have seen a decent recovery come through, especially when you look at it in the larger context of what's going on across Asia. Things are not too bad. I think where the main pain today really is in the broader market. So the Midcap index is seeing a 530-point cut. That's looking extremely weak, but for the larger names, there has been quite a good recovery. The banks also have recovered so well. It's just absolutely at the flat line right now. And Ekta, the banks will be more in focus as well, because tomorrow you have some of the big ones, ICICI, Kotak, all due to declare results.
Absolutely, Pavitra. I think that's going to be quite an important cue come Monday, because the two big banks will be reporting numbers. What they declare in terms of loan book as well as asset quality will be key, and what their outlook would probably be in terms of the festive season as well. Remember that IndusInd already has reported numbers. We have Federal Bank, which has reported numbers, but these two would be important from the corporate banking space or from the private banking space. But nonetheless, we do have the mid-cap index, like Pavitra mentioned, which is under pressure, so down around 1.3%. Joining us this afternoon, we have Ashish Kyal, a Wave Strategy Advisor, Sharad Avasthi, Head PCG Research, SMIFS, to answer all of your queries. Well, afternoon, gentlemen. Let's get to the first question then. We have Shailesh Singh, who's on the line from Ahmedabad. He has investments in Tata Motors. Hi, Shailesh.
Hello, madam. Good afternoon to everyone. My query is regarding Tata Motors. I hold around 200 shares of Tata Motors at the price of average of around 450, 455. So I'm a medium to long-term investor. Now, current prices are good level, and I'm thinking of booking the profit. The only question that I have is, I think Tata Technologies IPO is coming up. So if that becomes successful, can we see a little bit of a more upside on Tata Motors? In that case, I would like to hold, or if that is not the case, I can book out my profits at this current level.
Okay. Sharad, would you like to take this query?
Yeah. See, Tata Tech IPO, whether it happens or not and how it pans out is a different ballgame. But even without that, I think Tata Motors is something that one can continue to hold. Growth in terms of the passenger vehicle segment and the CV side, more on the electric vehicle and the passenger vehicle side. In the domestic growth, we are expecting it to be very strong. JLR has more or less turned around, and the earnings growth this year will be very rapid. We are expecting FY24 somewhere around 45-46 rupees. And next year also, it should grow around 20-25% to around 55-56 rupees. Even if I get conservative estimates of 15 to 20 times, I think you are looking at somewhere around 850 to 950 on the stock. So I think we have targets of 850 to 950 over the next 18 to 24 months for Tata Motors, and continue to hold. Tata Tech IPO, I think that is an additional trigger if it happens and as it happens. But even without that, I think Tata Motors is a very good stock to hold on for targets of around 850, 950.
Okay, 850 to 950 in terms of a target for Tata Motors, and this stock has done exceedingly well. This year itself, it's up around 70%. Ashish, how do you look at this stock on the charts?
See, first I would like to congratulate him, because he's been holding from 460 and continue to hold. Not everyone is holding for that much of the move, and I think the overall pattern looks very, very attractive. It's best to hold on to the stock from here. Also, there is a possibility we can expect the stock to move higher towards the level of 800. It has also given a breakout from that 650 mark, which was hurdle before, consolidated there for quite some time and gave a strong breakout. The pattern target is around 800 on the upside. So continue to hold the stock. On the downside, the support for the stock is around 600. So I would suggest that do not look at the IPO and try and decide about Tata Motors. The stock individually is doing exceptionally well. And the entire auto space, if you look at the auto space, they have been doing buzzing around. So hold on over here is the recommendation.
All right, hold is the recommendation on Tata Motors. So I hope that helps you, Shailesh Singh. This is the call from both of our guests on the technical side as well as on fundamentals. This is a great stock. You've done very well holding it for so long. And if you can, then perhaps stay invested in this one. This is a good one to have in your portfolio. But let's get on to the next query as well. John writes to us from Chennai. He holds 100 shares of Birlasoft at 66.4. He also has 100 shares of Zensar Tech at 155.2, and he's holding for the last 3 years. He wants to know the future prospects of his investments in both of these. Sharad, we've been getting a lot of these numbers coming through. Also, I think Birlasoft hasn't reported yet, but we do have Zensar's numbers for this quarter. How do you look at this? And within the Midcap IT, pack, do you think there are better ways to play it, or you think these are good calls to have?
Birlasoft could be a good story to bet on because the takeover from the KPIT business, whatever business they have got on the self-driving cars and everything, how that pans out, that could be a fresh trigger for the stock. Over the next 2-3 years also, we are expecting decent growth rates, around 18 to 20% for the stock. And considering those numbers, I think Birlasoft can easily trade at 20-25 times. Considering that, I think your target could be somewhere around 600-650 on the stock. So Birlasoft, he can continue to hold. Zensar, I think the valuations are not stretched out there also. We are looking at 14-15% kind of growth. So Zensar also he can hold for targets of around, say around 20 times. Yeah, FY26 we are expecting around 30-31 rupees. So 600 to 650 he can continue to hold Zensar also for targets of 650. So I think both these stocks are decent bets to hold on to. In case you want to add something where you want to play the interest rate reversal, I think Mastech could be a good name to add on.
Okay. Ashish, what would you recommend on both these stocks? Because both Birlasoft as well as Zensar have been outperformers. Do you think that there's further upside?
Yes, indeed. If you look at the large cap IT stocks, they have been struggling around. But if you look at the mid-cap IT space, I think that has been buzzing around, and Birlasoft has continued to show a stellar move on the upside. It started moving from 260 in April this year, is now at 540, but there is no reversal signs yet. I think there can be some profit booking over short term, but from the medium to long term perspective, continue to hold Birlasoft. We can expect a target of around 650 to 700 on the upside. And as far as Zensar Tech is concerned, again, very similar kind of a pattern. Over here, I would recommend to do partial profit booking at these levels because we are seeing some selling pressure building up from 580, some profit booking happening. So maybe book 50% out from here, and rest of the 50% keep trailing using a stop loss of around 460 on the downside, and continue to ride this trend because mid-cap IT space is a strong outperformer, and I want you to be in the trend when it's ongoing.
Okay, all right. Let's get to another question now. We have Mukesh Sundaram, who writes to us from Chennai, Tamil Nadu. Holds 4,600 shares of Yes Bank, which is purchased in 2017 at an average price of 52 rupees per share. Long-term investor wants to know what to do, whether he should hold or book his losses. Well, Sharad, I'm sure this is a question which has plagued a lot of retail investors who have, got stuck in a lot of these stocks. But for Yes Bank in particular, do you think that there could be a fundamental turnaround and hence that could probably reflect in the share price and maybe even get back to at least 50 levels?
At the moment, it looks a bit distant to me. I think the next 2 years also we are looking at what book value accretion of around 1.5, 1.75 only on the stock. And taking that into account, I think the full book value should come by around 18-19 rupees for the stock. Even if it trades at 1.2 times, I think 19 to 20 it will roughly become fairly valued, and we don't see any reason why Yes Bank should be re-rated very strongly. I think it would be better for you to switch to something like like a State Bank or even a Bank of Baroda. I think they still offer decent valuation, and the type of re-rating we are expecting in those two could be much larger than Yes Bank. And for banks to turn around, usually the story as it has been doled around that a turnaround will be very fast and swift. I think it's a long drawn process once your capital adequacy and everything has gone down the drain. So it does take a bit of time for a bank to revive. It cannot happen overnight. And for Yes Bank, I think it's still challenging. We are not expecting any abnormal growth there. So I think it's better if you get a price of somewhere around 2021, the average from 19 to 21, you should gradually try to exit Yes Bank and switch to something like a Bank of Baroda or SBI.
Okay, got that. By the way, Yes Bank also will be declaring their results tomorrow, so it'll be interesting to watch. Ashish, your thoughts on Yes Bank? I've lost count of the number of times, we've got queries on Yes Bank, but like Ekta said, it's very unfortunate. A lot of investors seem to have gotten stuck in these stocks. What would you advise someone who's bought at above 50?
See, if you look at Yes Bank, many people expect Yes Bank from 17 rupees, it can double to 34 very easily. That's the aim majority of the traders have. And also for the investors who are stuck at 50 levels, I would recommend it's best to be out from a stock like this, because every time there is a move on the upside, you expect it to continue, but it reverses back down. So recently also we saw that Yes Bank moved from 16 rupees, went towards that 19 rupees, and again it gave away all of these gains. It's better to be out from this stock. It's good that if you can invest some amount of the stock that you get from here into something like an SBI that looks very promising, or IndusInd Bank rather, because if you look at IndusInd Bank, that has been an outperforming stock. If you stay here, the opportunity loss that you might have in Yes Bank is going to be tremendous. So it's best to be out from there, get into something like IndusInd Bank or SBI.
All right, got that. That is the call on Yes Bank. Both of our guests saying that it's perhaps one that you should exit if you can. Then we are going to get into a short break. There are a lot of more queries that we have lined up as well, and we'll get to that in just a bit. But first up, a quick break.
Welcome back. You're still tuned into Your Stocks on CNBC TV18. We have Ashish, Kyal and Sharad Avasthi to answer all of your queries this afternoon. Let's get to another question then. We have Vismay, who writes to us from Bangalore. He holds 720 shares of Central Depository Services, or CDSL, which he's bought at around 1159 odd rupees. So he's sitting on a good profit there since the past 2 years. He's asking if the new settlement regulations of SEBI in 2024 will in fact benefit this stock. Well, Sharad, would you have a view on this particular reason?
Well, I don't think that will have a material impact because it is more about the number of folios that are there and the number of depository participants that are there rather than a per trade basis. I think most of the demat and stock demat charges now are more based on your annual holding charges. So the numbers have to go up in terms of the number of people that sign up for equity trading. And I think the new avenue, the insurance repository, is a fresh avenue for them because that is a big market considering the numbers we are expecting. FY26, the sales could be around 9 billion. This business itself could be around 2.5 billion. So that is around 20-25%. So that could be a big thing that can go up that can be very good for CDSL in the long term. In the short term, I think the speed at which we have seen acceleration in number of demat accounts in the post-COVID era, I think the speed, the momentum will not be the same in the years to come. But even then, the gap that we have is huge. Whether what the event will result in a J-shaped kind of growth for demat accounts, or whether it will be very normal as in the case of pre-COVID era. If that happens, I think then probably the valuations are a bit stretched. But considering the repository benefit that can come in, I think without considering those numbers, we are expecting 15 to 18% kind of growth for the company. And that would translate into an earnings of somewhere around 40-41 by FY26 with some upside from the repository business if it scales up very fast. So I think this is a business that could easily trade 30 to 40 times. So I think it is already trading at 30-32 times. So you can start booking some profits. You might book 25-30% at the current level. Very optimistic targets could be around 1600. So if it goes up to somewhere, say 1450, 1500, book another 25-30%. And the last lot you could book at somewhere around 1550 to 1600.
Okay, that is very helpful advice on CDSL. Ashish, what do you think of this one? He is sitting on good profits like we were mentioning. But do you think there's more to go from here, and would you advise staying in the stock for a bit?
See, CDSL is consolidating over past few months, and it's moving between the broad range of 1270 levels and on the upside 1420. That's the range between which it is consolidating after a good run up. So usually consolidation pattern happens before a continuation. So I'm assuming the breakout is going to be on the upside from here on. So continue to hold on to the stock. Maintain a stop loss on the downside, which is the lower end of the range, which is going to be around 1270. And we can expect once it manages to cross that 1400 again, we can expect it to move toward the level of 1600 levels. So that can be the target on the upside. Continue to hold here.
Okay, got that. That is on CDSL. The next query comes in from Mukesh Jaiswal, writes to us from Jaipur. Now, he holds 55 shares of AGI Greenpac, which he bought at 639. Wow, the stock is currently at almost 960. So he's made good money on this. He wants to know the long-term target for the stock. Ashish, this is one stock which has run up a lot and very fast, right? I mean, if you take a look at just a one-year chart, it's been a crazy move. How is this looking to you from here on, and would you recommend staying in it?
Yes, indeed, the stock has moved up from sub 300 levels and touched that 1100 mark, came very close to that 1100 mark. The move has been in exponential rise over here. I would recommend that book partial profits. You are getting good profit over here and book partial profit, but continue to stay in the trend because these kind of stocks, you never know whether it will go towards the multi-year high as well from here on. So I would recommend to hold on. The targets can be somewhere around 1500 that you can look at. And on the upside, it has to cross that 1050 hurdle. Once it does that, I'm expecting it to cross that, to touch that 1500, but you might have to wait for another 6 months of time. And on the downside, do not forget to use a stop loss, which is going to be around 860. Maintain that stop loss because these kind of stocks can reverse also very fast. And maintain a stop of 860 for the target of 1500.
Okay, well, AGI Greenpac, in fact, is involved in the manufacture of glass containers, specialty glass. So it basically is focused on that. It'll be interesting to see what the future prospects are. But before we get more queries in, we have the Hindustan Zinc numbers, where the net profit is in line with estimates. So it's coming at around 1729 odd crores. And the revenue also is just about a little shy of estimates. So 6,791 odd crores is where it's coming at. The net profit is absolutely stable, while the revenue has missed estimates by a tad bit. As you can see, the stock is down around 1.6%. Sharad, are you tracking Hindustan Zinc? Do you have a preliminary view on the numbers?
Yeah, I think the numbers are more or less on expected lines. And in terms of valuation also, we think it is roughly trading at fair value. And unless and until the cloud around the management issue gets confirmed, gets solved, I think the price will find it difficult to go beyond these levels. And I think the capex that they're doing for future, that might help them. But immediately, I think the overhang of the management issues is something that is plaguing the company. So I think the results are more or less in line with expectation, not much of a drawdown either way, means not much below expectations, more or less at par with what was expected by the markets.
Okay, that is on Hind Zinc. The stock is selling off a little bit. It's 2% in the red right now. It is, in line with estimates, but it was expected also to be quite a weak set for Hind Zinc because of the lower zinc prices, zinc volumes. We are still waiting by the way, for the individual split that we get for the volumes. In terms of what you should track now, by the way, the margin figure was also flashing. That's completely in line with what was expected. The revenue, like you can see, is down around 18.5%. So that has come in closer to around 6,800 crores. In terms of what you should track, of course, we're going to look at guidance on the volumes and realizations going forward. Also, any kind of clarity that we can get from the government on the stake sale, as well as Vedanta management's thought on participating in that. That is perhaps something that is important to watch for Hind Zinc from here on. The stock is down around 1.7%, so it's off the lows also a little bit, largely in line, like we were mentioning, perhaps just a little bit of a miss coming through on the revenue figure. But with that, we're going to have to wind down on this edition of Your Stocks with the news that the market is pretty much unchanged since we started. The pain still in the broader markets. The mid-cap index is where you're seeing a bulk of the pressure today, and the banks doing relatively better. But from Ekta, me and the team, thank you very much for tuning in. We have closing bell up next for the final hour of trade this week.